Greetings, my friends. Welcome to the next episode of the Mint Mob Podcast. Jason here, joined by my buddy Alex across the pond in Germany. And apparently he has some things in store for me that I don't know about, so we'll see how that goes. But before we do, let's check in. How's it going, buddy?
Hey man, everything is great. So much great stuff happening behind the scenes. Obviously, the markets are kind of having a little relief rally right now as well. I remember last week when we spoke about the crypto markets, everything went down a little bit after the big rally we had. I think I just read that we had 15 consecutive weeks of inflows into the ETFs, and now is the first week after that where some money came out. Some people took profits, obviously reasonable after what we've seen with Bitcoin. Now we're here. Now we're ready for the next leg up. Did you go shopping a little bit with the recent dips?
No, man. It has been a crazy year for me, as you know. So my focus has been on getting my personal shit together and working on some rental properties and that sort of thing. So I've kind of left the crypto buying on the side. I've picked up a few things, bought some Bitcoin recently, picked up some Solana recently. But outside of that, I haven't really been paying too much attention to, the whims of the market, as I stated on the spaces recently. It doesn't matter to me again because I'm not trading. So if I swing trade, I don't have to be there. And if I'm going long term, I don't have to be there every day checking everything. So for me, that just makes me feel better.
Yeah, absolutely. Get that. It perfectly makes sense. But on the other hand, there was somebody buying, actually, not today, but a few days ago. MicroStrategy bought, I think, over 21,000 Bitcoin more. So Michael Saylor continues to frame Bitcoin as a strategic treasury asset. I know we spoke many times about Michael Saylor and his strategy. We never really dove into that. But do you think, like, is he in some way dangerously over leveraged, or do you feel like what he does is a good thing for Bitcoin in the long term, and as a company?
I think he has been ahead of the curve on a few different ideas. The first one was the mobile idea. And I think he's kind of ahead of the curve on the Bitcoin idea as a treasury asset as it relates to companies. I mean, obviously he didn't beat people to Bitcoin, but he's beat pretty much every major company into the space. And I would never bet against him based on his track record. So I think if you look at what he's done, he's basically made strategy, what formerly MicroStrategy, into a Bitcoin treasury company that is able to leverage the asset on multiple platforms. So, if you're the average person and you're looking at Bitcoin, you can buy it directly, which makes a lot of people nervous, or you could buy strategy stock, which in turn holds it. But they've also created several trading products that allow you to purchase Bitcoin as well on traditional markets. So I think what he's done is he's shown people that the asset, so long as it is desirable, will have a market, and there's not much that you can do to stop it once it starts. So I think he has basically boarded that train, and we've got a pro crypto administration now. We've got other companies who are interested in creating corporate treasuries based on Bitcoin. And I don't think that train slows down anytime soon. So as far as him being over leveraged, no, I don't think he's at that point, and I don't think he's going to be at that point for some time to come. At least for the next 5 years, what I see for Bitcoin is probably another 50x. Could go more. In the next 5 to 10 years, could go even higher. Jack Mallers is predicting a 200x move in Bitcoin as it matures. This is, a long-range target. So, we'll see what happens. But I think that he's in a pretty good position right now.
But I mean, if we speak about oh, bless you. If we speak about cycles and people expecting big dips next year, actually next year is the 4-year cycle over, and we might go back into the bear market again. And if Bitcoin dips hard, do you think Michael will he still be a hero?
Yeah, for sure. I think what he's trying to get across to the average person, or at least to treasury companies right now who are looking at custodying the asset for like monetary preservation, is that the cycle story is pretty much dead. And I think that this has been evident in his posts on X. Like if you follow, I think today I saw a post, and I don't know when he posted it, but he keeps posting these hints at what he feels like is going to happen. And the one that I saw was it was a picture of like an AI generated image of him, I think in like some sort of Viking outfit, and it basically just said, "Winter isn't coming." Sort of I think what he's trying to communicate is that the big drop that everybody's waiting for isn't going to happen this time. Now, whether that's true or not is anybody's guess. But the thing that you have to remember is that if you're trying to preserve your purchasing power through time and space for extended periods of time, there is no currency that you can be in. And the only asset that is basically a guaranteed scarce asset on the planet right now is Bitcoin. You can't include gold or silver. You can't even include precious metals because even though they're finite, we don't know what the supply is. And every time the price of a precious metal goes up, it encourages miners to go find more. And so far, they keep finding more, right? So at the end of the day, I think the story with the whole halving cycle is going to become less and less relevant as more and more players enter the marketplace. Because when you drive the price up, like we have, over this time period, the disruption to the miners becomes less and less and less and less and less, because the mining reward becomes less and less and less and less and less, right? So the idea behind Bitcoin, at least the way that Satoshi structured it, was, early on, you're able to get these massive rewards in terms of tokens, but the tokens aren't worth anything, right? Like the first mining reward, 100 to 50 to 25 Bitcoin to 12 and a half to 6 and a quarter, down to 3.125 or whatever it is today. The value of the tokens has perpetually increased over this time period, but the amount of tokens you get continues to lessen. So if you were a miner and you were accustomed to getting, 25 Bitcoin at $100,000 a Bitcoin, and then the halving cycle hit, and now all of a sudden your revenue gets cut in half at $100,000 per token, that's really going to hurt, every time you look at that block reward. But when it goes from 3.125 to 1 point, whatever that is, 75, I don't even know what it is, I have to do the math. It's not that big of a deal, really, especially if the price of Bitcoin continues on the uptrend. So I think that the halving cycle is going to become less and less and less relevant over time, and that's by design. So we might see a pullback. I mean, it could drop to 80, and if so, I'll be a buyer because it will just be temporary. And anyone who's sitting on a corporate treasury that's looking at Bitcoin, I can promise you they're waiting for that. They're looking for that, and they will pounce on that, like a wolf on a piece of meat, dude. They're going to jump all over it. So I wouldn't expect it to stay there very long. Just like, you mentioned today, the markets have shifted a bit. We went from 123 down, I think, all the way to 113-ish, if I remember my charting over the weekend. And where are we at today? Well, we're not at 113. We're up. And this is what's happening. As people see opportunity, they're stepping into the space. And when you have big-time buyers picking up all of the supply that's created in one single day, the price can only fall so far. So I don't really think the halving cycle is going to be as much of a factor as the block reward continues to fall and the price continues to rise.
Yeah, man, I totally agree. I think I've said that many times that I feel like the 4-year cycle is probably getting less and less significant, obviously. But I feel like there's still so many actors in this space who invested this cycle because they believed that this cycle is going to continue, or this 4-year cycle is going to continue forever, and they expected like to have that huge season this year, and to sell for 26 and then wait 2 years and buy again and then have the big next bull run in 29 and blah blah blah. Obviously, this is not going to happen with all the stuff that happened this cycle, especially with all the regulations, all the big institutions and countries buying Bitcoin. There was actually one question that someone asked on X today. He was like, should governments own crypto or just regulate it? And this is actually interesting because if you look at the Genius Act that passed, the law that actually set strict rules. It says that stablecoins must be backed 1-to-1 by low risk assets. I don't even like what's meant by that. Like, is it like gold or
No.
or like what's no? It's like stocks or what is it like? Enlighten me.
The way that I understand it, and again, I could be wrong, is it's 1-to-1 dollar denominated asset. So for every, USD token or whatever, you have to have a US dollar equivalent. Now that equivalent could be something like a bond, right? But it has to be a dollar denominated 1-for-1 entity or item, I should say. And so in this way, and two, with companies like Circle that are becoming, more public about what it is that they're doing and taking on investors and that sort of thing. Like the big thing with the banking sector using tokenized US dollars, and a company like Circle providing USD or whatever it is, the more they get attached to regulation, the more difficult it will be for them to hoodwink the public, right? So the idea is that if we can provide clear regulations around what is meant by a 1-to-1 holding, for example, in this case, or a tokenized dollar asset in this case, then what we can do basically is create a situation where all of these companies who participate in this market can be audited by the SEC or any, financial agency at any point in time, and they have to show proof, right? So the only way to hoodwink the public would be to lie to these agencies and show false or falsify your books, which is increasingly difficult in the digital world, especially if you're dealing with blockchain, right? So I think all this is really doing is providing a foundation for the average person to have more trust in crypto assets. And of course, it's given the banks the ability to now hold them and understand what they are. And when that happens, when people log into their online banking and they see, oh, well, I can hold USDC or whatever the case may be, then the curiosity is piqued. And when you can look at something like USDC on Coinbase, for example, if I'm holding $10,000 in my savings account right now at US Bank, for example, they pay me like 0.0 something. It's ridiculously low, and at the end of the month, I'll get like 2 cents for, holding my money in that savings account. Or I could just convert that $10,000 to USDC and hold it at Coinbase, and they'll pay me 4.5%, right? And so the average person who's looking at, oh shit, man, how can I multiply assets? 4.5% or 2 cents at the end of the month? Well, I'd rather have my 4.5%, I mean, that's more than you can make on your money at any bank anywhere in the US, so to me, that makes a lot of sense. And if I know for sure that USDC is backed 1-for-1 by US dollars, now I don't really care if it's a USDC or if it's USD, if it's at Coinbase or if it's at US, I don't care. It's all tied in together. It's all backed and legitimized by the system that was created with the laws that were recently passed. So it's basically just allowing people to trust that their crypto is going to be there whenever they come calling for it, if that makes sense.
Yeah, absolutely, and I do agree because I like the approach, especially of the United States right now. All the regulations, because from time to time you always see these kind of comparisons between the countries right now, who is actually embracing crypto, who is kind of falling behind. I think I just read today that the United Kingdom is kind of falling behind. I think Hong Kong, for example, is issuing a stablecoin license as well. Pakistan has like a crypto council, and all these countries are currently trying to get their ways into crypto. And right now, like this feels so important. It feels like, regulatory clarity matters more than, the tech at this stage. And I read a little hot take. It said, "We are entering a crypto cold war, not about coins, but about who gets to define the rules." And this is the United States right now, isn't it?
Yeah, I think so. Absolutely.
It's like like I said, like, do you think we would be at this point right now, regulation wise, if we, if the election went different back in November?
No, I don't, because the previous administration was completely anti-crypto and proved it time and time again. Between the Elizabeth Warrens and the Gary Genslers of the world, I mean, they actively sought to make it nearly impossible for the U.S. to lead in the world of crypto. And as you laid out earlier, when you were, mentioning the countries who are adopting certain crypto standards, what had to happen first? Well, the U.S. had to lead. The U.S. led with its consumer base and its financial system and its legal system. And now these other countries are looking at that saying, okay, well, we can do that too. We're going to have to keep up. We're going to have to, play this game, right? And so there's an old saying, that sort of proliferates through the financial world. And that is, and even in like the libertarian world, is like, as the U.S. goes, so goes the world. And there's a huge reason for this, not only because of financial power, but because of personal freedom and rule of law. So the U.S. is one of the only jurisdictions in the world that has reliable rule of law when it comes to owning your property. And in the case of, if you look at what happened in Cyprus, whatever it was, like 10 or 12 years ago, where the government racked up a bunch of debt and they just decided overnight, whatever money's in your account, we're just going to take half of it. People woke up to half their wealth being stolen by their own government out of their own banks. And this, can happen here as well. We saw in Canada during the trucker protests, we saw accounts shut down by the government. So anytime you have banks in cahoots with government, your money is not your own. And so the more people we can expose to crypto, even if it's through a traditional rail, they will then, if they're curious enough, find alternative rails. They'll find ways to make sure that, they can preserve their wealth. They might start with a custodied account at a bank. Then they might move to a custodied account at Coinbase. And then they might move to completely non-custodial wallets that they hold somewhere and keep a seed phrase for, right? But all of this stuff happens step by step by step by step. You're not going to take the average person and say, hey, you know what, convert your wealth to, Bitcoin or USDC, and then, just disappear into the world. No, they're not going to get it. What do you mean wallet? Why do I have to have a wallet? What is this seed phrase thing? Why does my phone wallet have a password? If the seed is the password good? If someone else has the seed phrase, they're not going to get it, right? So at the end of the day, like, these are all just ways of stair-stepping the average person into the crypto realm so that they can understand how it works. And of course, you're talking about like Gen X and beyond. Like, everyone who's young and youthful, right now they're exposed to it, whether they own it or not. They have some sort of idea about what it is. They may not understand it completely or technically or even have a wallet. But if you tell one of these people, hey, you know what, you want to start thinking about this, they'll pick it up a lot quicker because they're accustomed to dealing with technology. So really, the people with money, like the people like Gen X and beyond who actually have some wealth in this world, these rails that are showing up in their traditional bank accounts are going to be sort of like a gateway drug to getting them in deeper, right? And I think that's really the major significance of what's happening with like the U.S., the laws that were created, because what they do is they solidify how you can understand your relationship to your property. That's all it is. And ownership is just your relationship to the property, right? Like, I would never put money in, like a South American bank account and hope that it was going to be there tomorrow, because too many times we've seen, those governments basically deflate or commandeer people's assets. China, for example, there's a famous investor here named Robert Kiyosaki. He, tells a story all the time of how he opened up a silver mine in China and then listed it on a public exchange, right? And the government basically just seized it from him because it was profitable. They just took it from him. No explanation. No, he didn't do anything wrong. They're like, thanks for playing. This is now ours. That doesn't happen in the US, at least not to the same extent. And so people here understand that they have a claim on their property, and foreigners understand that if they invest here, they have a claim on their property. And that's the power of this legal system around, demonstrating exactly how things work that you own.
Yeah, absolutely. And that's why, regulations on crypto are good as well, because they, offer some sort of protection, at least to some degree, for people or new people in the space. But if it comes to NFTs, there is actually a big study that reveals massive smart contract risks. It says, wait, let me see if I find it. A major study found thousands of NFT projects hiding rug pull mechanics, affecting 670,000 victims and costing over 59 million. And that's interesting because I know you and we've spoken about that a lot, about the NFT ecosystem, about all these staking pages, about how, the whole ecosystem is still, quote unquote, trust me, bro tech. And you never know what's, behind these pages. Marketplaces do not really bear responsibility for filtering scams.
Mm-hmm.
And this led me to the question whether, because in cryptocurrencies, you see that they're often like third parties auditing the contracts and see if everything is safe or not. Do you think that would be a good idea for NFTs as well? Because obviously, if you buy, I don't know, a house, a car, or whatever, you usually do not buy it without an inspection. So why are people still blindly minting $500 JPEGs?
Yeah, I mean, the thing is, it's like, where is your recourse is the question. It's a question of recourse. So if I'm looking at the stablecoin market that's been opened up to the traditional banking system, what they've done is they've created a system of recourse. So like if I own USDC or what have you, Circle's product, if they're audited or if my money disappears or if it's not there, when I go to complain, I now have recourse. I know who's behind the company. I know its structure. I know its documents. I know who to go to complain and to create some sort of recourse to regain my wealth, right? In these anonymous, stupid fucking token projects and NFT projects where everybody's hiding behind a PFP, no one knows anybody, there's literally no recourse, right? And this is by design because on some level, crypto sprang up from the idea of libertarianism, which is, hey, leave me alone. I'm entitled to my privacy. I'm entitled to my property. But people took advantage of that, and you saw people show up, make all these claims, sell all this stuff, and then just rug the project and disappear. So it's a double-edged sword. So just because someone shows up in the world and makes an offer to you, that doesn't mean that you should take advantage. Again, it's buyer beware, always buyer beware. So if I'm looking at something and it's based on some anonymous nonsense with 0% recourse, then what I'm doing is I'm making a bet and I'm saying, okay, well, I'm going to trust that these people are going to have my best interest at heart. And you can legitimately take on that risk if you understand that you have no recourse, right? So like these projects that you're talking about should just pop up and say, you have no recourse if we screw you. That's really all that's happening. And if you're willing to take that risk, so be it, right? But you can't present your project as like this, legitimate thing when people have no recourse ultimately. So it all comes down to recourse. And I think what these NFT projects need to understand is, A, they need to have a good foundation and start with IP rights for sure. There needs to be a chain of custody with what they're putting out, with what their claims are. And 2, regulation is coming. You will not be immune to it. It is coming. And if you plan to do business on the blockchain, you better plan for regulation to be part of that. Because you can't have it both ways. You can't whine and moan and bitch and complain if someone screws you and say, oh, we need recourse. And then when recourse shows up in the form of regulation, bitch about the regulation, right? The problem isn't people getting screwed. The problem is people being responsible for their stupid decisions. That's the problem. So like, again, if there is no recourse and this is an anonymous project, I have no recourse. So if I put my money in, I'm gambling, and I need to understand that. If they screw me, I shouldn't go around complaining saying, oh, you need to track this person down and regulate them. No, I should just say, well, I knew there was no recourse going in. Therefore, hey, I get what I got. It's the whole fuck around and find out thing, right? If you play stupid games, you win stupid prizes. But what happens is, because it has become so ubiquitous, like people getting screwed, it puts everybody on edge. It turns people away. It turns into a situation where people have a negative view of the technology. And now, if you really want to do anything, you have to really go over and above to prove to people, okay, I'm not going to screw you. We have some system of recourse. These are the people you're dealing with. And oh, by the way, if that's not good enough, here comes the regulators. And that is the way it goes, right? Like, if people were responsible for their decisions, you would need no regulators, right? You wouldn't. But the fact is, we want to pretend that we're responsible when it's in our favor, and then pretend that we're not when it's not. And then this is where the regulators come in and say, oh, we're going to save you. We're going to prevent all this. And the average person says, that's a great idea. These people screwed me. Completely forgetting that once regulation is in there, it's in there and it's never going away.
Yeah, man, that's true. I mean, I do feel like, people are responsible for their decisions. But, if I think about, because we spoke about that I've been, when I looked for artist incubator artists on Facebook and the Facebook groups, speaking to traditional artists, good people, goodwill, nothing bad in their mind. And, they entered the NFT market, had no idea of crypto. Like, I feel like that's like a situation where you cannot just say like, okay, consumer caution is like the only defense right now in that largely unregulated space. So I feel like, if marketplaces, for example, if they required mandatory auditing before listing, that would solve the problem. So I feel like we should let people in and give them like the possibility to trade their art without having to to worry about their funds or being like exploited or whatever. And as you said, like regulations are probably coming, and I think it's not such a bad thing necessarily, because I want this place to be safe, obviously, but still decentralized. Yeah, man. Like when I read that story, when I read that study, I felt like, what does it mean to have rug mechanics? Because obviously, if you look at the Goodfellas, the metadata is not immutable, so we can change things. If you wanted, you could like remove all the images from the tokens, right?
Mm-hmm.
So on the other hand, you will have to have trust to the founders, the project, to whatever you buy, obviously, because it doesn't make sense for us to create something like that and make it immutable and have no control over it, right?
The immutability versus the sort of recourse regulation debate are really two different things. If we wanted to, we could make everything immutable right now. And we could actually, if we wanted to, we could actually lock pieces to certain wallets so they could never even change hands. This is one of the things that the Metaplex core update allowed. And you could also do things where you give update authority to a holder. There's all these different things you can do with the core NFTs, right? But none of that has anything to do with whether or not recourse and regulation should come into play. The recourse regulation thing has to do with your ability to understand the risk that you're taking. That's all it is. And if there's risk and you understand how the project works and you understand what's happening there and you take it, then that's on you. In the free world, that would be on you. In a world where you're not free, the regulators can come in and then sort of start thinking about, oh, how do we undo this? Kind of like when ETH did the ETH Classic versus the regular ETH update. They had a bunch of tokens stolen And so, rather than just accepting the fact that they had a bunch of stolen tokens by a hacker, they said, oh, well, let's do this. Let's fork the chain and let's put all the tokens back, right? They literally forked the entire chain to put the tokens back, right? And that's why you have ETH Classic and ETH. The Classic guys were like, oh, no, it's immutable. It can't be changed. And everybody else was like, well, we got screwed, so we need to change it. So that's the argument about immutability. Can you undo transactions, right? And if you undo the transactions, you totally screw with the immutability aspect of the chain itself. But what rides on the chain, what rides on the chain is data. And if the data needs to be updated, so be it. That has nothing to do with whether or not a regulator should come in and say, okay, well, this person stole from you, therefore you have to make all these people whole. ETH Foundation, you're on the hook for, the $300 million worth of ETH that got stolen, and you need to pay these people, right? That's a different thing altogether.
Yeah, when I mentioned the metadata and all that stuff, I was basically referring to what they call rug mechanics. So basically, like every NFT project I know of has probably the update authority and can do whatever they want, right? So what do you think do they mean when they say rug mechanics?
I don't know. It could mean a variety of things that you laid out, like being able to change parts of the NFT, but the thing about the NFT is, like, if you want to be able to work with it over time, you have to be able to update it, right? You have to be able to update the metadata. So if you want your NFT to represent something that is just locked in space and time, like an ordinal, for example, then that's a different idea than having an NFT that represents a piece of artwork or provenance, for example, or even like storytelling that's attached itself to that NFT, or any of the things that you want to do in a business use case where you wanted to, like, create a loyalty program and track the number of purchases that someone had with that particular NFT, for example. Like, if you're going to do any sort of business or like higher end interaction with the NFT, it has to be updatable on some level.
Yeah, it has to, obviously. Like I'm not sure if we ever made use of that. I think there were like I don't know, a few typos in the metadata. Yet right now, when you refined the metadata on Phantom, you couldn't have done, or on Backpack, you couldn't have done that if like the original version would have been immutable, right?
Yeah. If you wanted to, let's say, for example, you made a mistake, like you're talking about that the core drop with the write up in it. Like, if that write up didn't display correctly because the system added an extra escape character, so it didn't format the paragraphs correctly, I would not have been able to update that if the NFT were immutable. It would just be ugly forever, right? And there's a certain beauty in the ugly. It's like, okay, well, this can never be changed, right? And there's a certain beauty to that because you can say, okay, well, this is part of humanity. Humans make mistakes, or the system did what the system did, absent, its permissions to do so. So there's a certain beauty in that. But for me, like, I would rather have the beautiful text that I can read inside Backpack that actually flows like a paragraph should flow, right? And that's really a personal preference thing. So, and that's why that's why we have ETH Classic and ETH, because people disagreed on what should or shouldn't be updated or changed, right?
Yeah, absolutely. It's funny that you mentioned that there is a beauty in, in like ugly things, because sometimes when you have like certain collectibles or prints with like errors, they become especially valuable because of that. So
Yeah,
yeah,
absolutely.
that's interesting. But let's
100%.
dive a little bit into the Siren Syndicate badge that is coming up today. Just today, yesterday, I shared the new upgraded art to our bosses. Um, they liked it. That's a very good thing. I loved to hear the feedback, and that the whole kind of style that Daria brings, the level of realism, the body shading that is completely different. yeah, people think it's a glow up. That's what we thought when we saw it as well. We shared a little transition video. We shared one piece. You will be able to see some more sneak peeks leading up to the mint on X, on Discord, obviously. And yeah, Siren Syndicate. We will have Daria on Friday Spaces, and in addition to that, we will have Jason from Planet Amor on Spaces as well. We know that there was some open questions regarding the RWA drop we had, and I think you said that you have access to like there is no dashboard or something, but you have access to, I don't know, the amount of carbon credits we have, or what was it?
Yeah, obviously when we purchase a real world asset from them and we tie it to an NFT, there has to be tracking on what that particular, in this case, it's a tree, like tree growing in South America. So there's a certain number of coordinates that tie that NFT to that tree, and then that NFT is tied to those coordinates in their system as well. So when we have someone who wants to capitalize on their carbon credits or buy or sell carbon credits, currently we go through them in some form of manual process. What we ultimately want to do is have that be automated. And so those are some of the things that we can talk about with Jason. They have a lot of plans to make sure that this happens. But of course, they're a young company like any, and I think the right thing to do is to just have them, stand up and explain what's happening in their world, so we can, let all of our people who hold these pieces understand, what the process is and where they are. We want to maintain that tight knit relationship rather than just dump something on the market and just say, oh well, forget about it. So again, this is anytime we do some sort of relationship, transaction with a business. There's money involved and there's personalities involved, and we want to make sure we keep those things nice and tight. So this will just be one way for us to, question one of the employees and kind of push them to do what needs to happen to make sure that we can have access to the admin.
Yeah, absolutely. So if you guys have any questions to Jason on Friday, and yeah, you feel free to drop them on Discord, and we'll just collect all the questions and make sure to find an answer on Friday. And we will obviously, hopefully, I haven't actually spoken to her yet, but hopefully have Daria on Spaces as well, as we will have the mint on the Friday after, August 15. 90 pieces coming to Solana, and we will get to an even number of 300 pieces of Sirens in the Siren Syndicate collection. And yeah, whoever was on the on the allow list, or whoever minted a piece from us on Solana, will be on the allow list. So you guys do not have to worry about that. The mint price and all the final mint information will be disclosed like a few days before the mint, as always. Mint time is going to be the same, so when we go live, the mint should go live as well. And yeah, man, looking forward to that collection. You've seen, like, compared to last time we spoke, you've seen a lot more stuff that Daria provided to us, hand trades and all that stuff. She also created a one of one. What do you think, man?
Yeah, I mean, the work is amazing. She has, I think, really smoothed out and evolved the work from what we initially saw. So yeah, I mean, I have nothing but good things to say about it so far. And the sneak peeks that you've posted are not even complete. These are just like ideas that we threw together, or that actually she threw together and sent over. So none of these pieces even exist. These are just ideas. So you're not even seeing the finalized pieces yet. So if you like that, just wait till the final pieces drop.
Yep, absolutely. Like I have some favorites already when it comes to hair trades and outfits, and I was like, okay, let's not take it away too quick. So yeah, looking forward to share all that kind of stuff, and obviously we'll keep some secrets and surprises for the mint as well. And yeah, this is the schedule for the upcoming 2 weeks. I hope you guys look forward to the Siren Syndicate reunion. This is obviously the next big thing for us. After that, on August 29, we will have Anna's Artist Incubator piece. She's obviously going to join Spaces as well when the time comes. And this was all to promote. Jason, do we have anything left for today?
I don't think so, brother man. I think we're good to go. Yeah, looking forward to Friday. Should be good times. And obviously, we got a lot to get done this week. So we should probably jump in.
Yep, absolutely. So I wish you guys a very happy week. Have a great time. Do what you need to do. Do your workouts. Go to work. Probably do not spend too much time watching the charts. It's not as yeah, it's not too much fun right now, but the time will come again. It's always like a couple days when we have a leg up, and then it's consolidation for weeks again. So yeah, do what you love, do what you like to do, and I hope to see you guys on Friday Spaces. Have a great one. Until then, bye bye.
Take care, guys.